Joining me now, Kevin Hassett, former chair of the Council of Economic Advisors during the Trump administration, author of the most important book of the new century. It's called Drift, Stopping America's Slide to Socialism. And Art Laffer, former Reagan economist, Presidential Medal of Freedom recipient, and author of the second most important book of the century, Taxes Have Consequences. Boy, that's a killer. I'm going to pay for that. Anyway, all right, gentlemen, thank you for coming. Yeah. I know. I shouldn't have gone there, but I did. You can't have it back in live TV. All right, gentlemen, thank you very much. Arthur Laffer, you used to have or still have an investment service. Why is the stock market booming?
Well, I liked your three answers already. I mean, I thought the three answers were great. Number one, Trump's going to be the next president of the United States. That's pretty good news. Now, that's looking pretty far ahead. The other one is they're going to cut interest rates. But the big one of all is Biden's not going to be president of the United States. And that is just the most wonderful news I can imagine.
So, all right, you're going to rest your case on that. Three macro political oriented points. That's what you're saying. I just want to get this right. All right, Kevin Hassett, I'm going to unleash you on this story. By the way, I think the AI technology story, Schumpeterian gales of creative destruction. I mean, you know, if the federal government doesn't obstruct all of these great technological breakthroughs, it should be very, very, very good for the health and future of the American economy and therefore its companies and therefore the stock market, Kevin. I don't know if you buy that, but that's a thought.
You know, I think you're exactly right. I thought the report that we just heard nailed what I've been thinking about, which is the one thing that's been going on with the economic data is that it's been kind of surprising on the upside. There's been more growth, like we're looking at fourth quarter growth now, maybe as high as 3%. And I think that what's going on, I'm beginning to believe, is that artificial intelligence is spreading really quickly, reducing costs, increasing efficiencies. And so I think we could be about to go through something like we did with, you know, the late 90s when the internet started to become a thing. And I think that AI is really, really, as you said, Schumpeterian creative destruction. And a way to think about it is that go use the AI instead of Google if you have something that you want to learn about on the internet. And it's way better, right? And so, you know, poor Google, they're investing in AI, but there are all these AIs out there that are really changing the game on the internet, and I think in a way that is palpable for businesses and probably affecting output growth. And so interest rates aren't going down a lot, even though that the federal funds futures say they are. It's really got to be that there's some positive economic news, and the only thing that I can think of is a technological breakthrough that's having bigger effects than people thought.
Yeah, Schumpeterian gales of creative destruction. It is like the 1990s. You're exactly right. I know at the turn of the last century, some buggy whip makers lost their jobs, but the rise of the automobile and related industrial breakthroughs was fabulous for the American economy, made us the greatest economic power in the world. Art Laffer, come back to this point. You know, Joe Biden, not a popular guy among businesses. He's usually rails on about business. In fact, we'll get to his silly 8.5% tax rate on billionaires in just a few moments. But I don't see any evidence, Art, of a recession. I mean, a lot of us looked for a recession. It has not materialized. You know, sometimes you get the story wrong. I wouldn't say the economy is fabulous. Manufacturing has been very weak, okay? Housing may be coming back. Retail sales, that's probably the strongest area, consumer spending. But Arthur, my bigger point is the economy is doing better. What's the case for the Fed slashing interest rates the way some of the bond market indicators were indicating?
Yeah, let me, if I can, just confirm Kevin's point earlier about AI. The stock you want to look at there is NVIDIA. And if you look at NVIDIA, and I don't own the stock, but if you look at NVIDIA, it has just had this enormous run, which confirms exactly what Kevin was saying. Now, when you look at the economy here, we've had very slow growth for about 20, 25 years. I mean, declining participation rates, real output per person declining over the period. You know, we have had a long period of decline that really has been quite tragic. So will it be a recession? Who knows? Who cares? It's really been a bad economy for a long time. And, you know, I don't know what the Fed's going to do on this, Larry, but I think they're far more inclined to lower rates now than they were 2 weeks ago.
Why?
And
Why?
the economy, I don't think, is performing exceptionally well.
You just had a booming
it's got a long way to go to catch up.
You just had a booming retail sales number. Why should the Fed? I mean, what you have is, if you look at it, the demand side, that is retail sales and consumer spending, is solid, okay? How long is it going to last? I don't know, but it looks like. The supply side of the economy, if I use manufacturing output or if I use business investment output, does not look fine. So that looks like too much money chasing too few goods, which the Fed should worry about. They shouldn't be cutting rates. They should be holding rates where they were or where they are.
They don't believe what you say, Larry, about what causes inflation. I mean, you're completely correct on what causes inflation, but they think a slow economy is the way to stop inflation, and that's what they believe. That's what they've believed for a long time, and they've acted that way. Whenever the economy appears to slow down or weaken, they've been wanting to lower interest rates, and that's the way they've done it, Larry, and it's wrong, but they just persist.
Kevin Hassett, is it wrong? I mean, you think the Fed's going to dive in and start slashing rates, even though there's no recession? I mean, the economy in the fourth quarter of last year probably be, what, 2.5%? I haven't seen the update for the GDP now, but it's a mixed bag.
Yeah, it's 2.5 right now, yeah.
Okay, call it 2.5%. Why should the Fed slash rates? Their inflation numbers are down, although prices are still well up over the last 3 years, but the inflation numbers are still above their 2% target. I somehow have more confidence in Jay Powell. I don't think that he's going to push the Fed to be slashing rates to juice the economy, but I don't know. I'm going to give you another whack at that one.
Right. Yeah, you know, you got me thinking about this when we talked last week, and I just put a piece up at National Review today on this very topic. And if you go through, I think, the bones of the inflation numbers, inflation's accelerating. You remember the Fed told us last year they have this thing called Supercore that they look at really closely. Well, Supercore right now is running at an annual rate of 4.9%, you know, in the CPI. And so with that, plus the kind of strong economic growth, it'd be crazy for the Fed to start cutting rates. But futures markets say they're going to cut rates at every meeting between May and the election. And so I think that it's probably the case that markets think that the Fed's going to be partisan. I don't think Jay Powell would succumb to that. And so I think that there's going to be, you know, quite a reckoning in bond markets as like the Fed doesn't move because the data don't allow them to. But if the Fed does move, then it means that they have been captured by partisans because there's no other reason, unless the data turn a lot between now and May, which I don't think that's going to happen.
All right, one more point. We have some sound from Joe Biden selling Bidenomics because he doesn't like rich people. And take a listen to what he said. I think it was yesterday, once again, in North Carolina.
You know how many billionaires we have in America today? 1,000. You know what their average rate, federal tax rate is? 8.5%.
All right. Art Laffer, tax expert, father of us all, okay? Here's the deal. He keeps using this number, 8.5%. He's used it, I don't know, for a couple of years now. Correct me if I'm wrong, but his staff, has ginned this number up on the basis of a wealth tax on unrealized capital gains, which doesn't exist. No such tax has ever passed. But they keep using that, which they wanted and were defeated, in order to go after billionaires. And by the way, it ain't just billionaires, because it's others. But the point is that right? That's what they're doing here? They're putting in a tax that doesn't yet exist?
Yes, they're exactly doing that. They're counting income as including increases in unrealized capital gains, and that's where they get these numbers. And you're right that unrealized capital gains has never been taxed and probably won't be taxed in the near future at all. But when you look at it, I find it irony. I mean, it's not lost on me that Joe Biden would be pushing the IRS to collect money from tax cheats. That is, I think, very ironic. And also, Larry, just for the facts of it, every time they've raised tax rates on the top income earners in the United States, every time they've done that, the economy has underperformed, revenues from the top 1% have gone down, and poverty levels have increased, unemployment, et cetera, has increased for the poor, the minorities, the disenfranchised. The exact opposite of what he says he wants to do. He just doesn't care about facts at all, Larry, and he's just saying things hopefully to stir the pot. But facts are facts, and he's wrong 100% on what he's saying.
I mean, Kevin Hassett, I agree with what Art just said in terms of the dynamics of the Laffer curve. But Kevin, as a former chair of the CEA, I mean, the duplicitousness of this Biden calculation is so troubling to me. I'm going to give you the last 30 seconds.
Right, but on the other side, there was good news today that we haven't talked about yet that's a positive for markets, which is the Democrats in the Senate, with Ron Wyden, agreed with Jason Smith, the chairman of the Ways and Means Committee, to extend the Trump corporate tax cuts through 2025.
Yes.
Now, it hasn't passed yet.
That's good news.
But the fact that the Democrats understand that if you reverse those tax cuts, then you're going to hurt the economy means that there's hope for tax policy. Like Ron Wyden did the right thing.
There's always hope. Kevin Hassett, there's always hope. Art Laffer, there's always hope. And for me, there's no hope left.
Thank you, sir.
Anyway, you guys are terrific. Thanks very much. Appreciate it.